Hi, it's David. In today's video, we talk about the US interest rate release and why I choose to trade this currency and why I choose to trade this high impact news release. First of all, I need to see whether it's worth trading or not. I look at the previous, which is March 20th, 2019. So I look at look at any chart that has US dollar and see whether it's worth trading or not. So the previous news release date was March 20th, 21st. So I look at March 21st. March 21st. Okay, so once I look at the date already, it shows here March 20th because it's a morning. This is in GMT. So right now is we are pretty sure that the news release has high impact on the currency pair, and the traders are bearish on the US dollar, so they are all currency against the US dollar is strong. So this make me feel that this pair is worth trading. So right now, we shall trade this pair. However, something happened in the trade. The market didn't move. Remember this is in GMT. So the market is supposed to be moving at this date, but this timing, but it didn't move. Only when the FOMC press conference, which is at 2:30 a.m. This is Singapore time, by the way. Then the market moved. So, however, the previous news release, traders are bearish against the US dollar, but in this trade, the traders are bullish against the US dollar. So that's why the market falls, but only after 2:30. It's supposed to the movement supposed to start at 2 a.m. but we only see the true movement at 2:30 a.m. which is pretty weird. So right now, what should we do? Normally what I will do is I will hedge. Normally what I will do is I will look at the higher time frame. So the market I'm actually consider shorting the Kiwi dollar because there's a pullback and there's no breakout. But on the flip side, the US dollar seems to be on a downward trend. But I'm not sure whether the release will impact and cause it to be will cause it to fall through or not. However, I'm also looking at euro dollar. The market was right here. So with these three charts in mind, I look at the 50-minute time frame. Why the 50 minutes? Because for high impact news, right, the volatility is the pip spread will have an impact on my strategy, which is hedging. So what I'll normally do is, if the pair is below the 200 EMA, I normally would short the pair. Yeah. If the pair is way below the 200 EMA and there's a huge gap, there's a possibility that the market might do a pullback to cover this gap. On the euro dollar, however, it's not so evident, but it's the same lah, I think. There's still a huge gap. So what we're looking for is either a very small gap near the 200 where the market is near the 200 EMA, or you can hedge like the US Euro Swiss US Swiss, which is you can continue to short or you hedge 20 to 25 pips. 20 pips. I recommend 20 pips at this area. So if the market you hedge here, so 1337, so we're looking at 23.7 about here. So it's here 400, so it's here, so 600, 700, 800. So we have about 20 pips. On average, we're looking at 50 pips for 50 pips move for high impact news. Thank you for watching this video. I hope it's insightful. Catch you later.